Good morning, everyone. Today is Tuesday, April 12th, and I'm Marv Eisen from Timeless Dollar. Starting the day, looking at the economic calendar, the Consumer Price Index report was due out at 8:30. It's just a bit after 8:30, and the number was announced at 8.5%, a bit higher than expected, and so I don't think that's really news to anyone. So moving over to the morning news, and I am looking at CNBC. Flags are generally in the green. Will they stay that way? Not so sure. The 10-year Treasury is still up at 2.7. It's gone up smartly through the year. No real news here. The highlight of the day, consumer prices rose 8.5%, as we already know, and there really isn't much else. I don't take much stock, or that's a pun, I don't take much stock in the news because it's already baked into the price of the S&P. So speaking of the S&P, let's move over to the S&P. This is a 3-minute chart with 4 points between each horizontal line. And this is yesterday's chart. I'm not going to show you today's because I have my trading zone placed on that chart, and I use the trading zone to show me the area where the market is likely to trade each day, and I calculate the number each day, and it's a complex calculation. So I'm not going to move over to today. But other than that, the only two things I know that you as a trader could know is where today's close was, which was 44.09, or yesterday's close rather, and the trading zone, which you probably don't have. You can get it at Timeless Dollar as a subscription. Very well worth it. These trading zone numbers plus the close of the previous day are the only thing that we traders know at the start of the day. So let's talk about trading. If you're at your computer looking at the S&P, trading S&P E-minis or micro E-minis, you probably call yourself a trader. But unless you really know how to trade, you're not a trader. I mean, after all, if you were an attorney without a law degree, would you call yourself an attorney? Nobody else would. If you were a doctor without a doctor's degree, would you call yourself a doctor? Nobody else would. So why would you call yourself a trader if you don't have any bona fides, that is education, in trading? You really can't. All you're doing is a guy trying to make money trading futures. Okay, let's get that out of the way. But nevertheless, don't feel so badly, particularly if you've been losing money. Remember, it took trillions of dollars, 20 years, and 4 presidents to replace the Taliban with the Taliban. Okay, so don't let the market get you down. Anyway, the message today is learn the basics. Before you do anything else in trading, you need to get an education to learn the basics. You need a solid grasp on the basics. And the basics of trading are the candlesticks, the candlestick patterns, the trading zone. The trading zone is a little beyond the basic, but it's very useful in terms of reality of where the market will trade. The intraday high or low, support and resistance, and things of that nature. Trade setups. Do you have trade setups, and do you use them? Most professional traders know the trade setups, and they don't use a lot of them because most trades setups are meant to force you to take a trade in the wrong direction. Okay, so let's talk about the basics. And forgetting about the trading zone, forgetting about the intraday high or low and those things, what can you see looking at a chart? In hindsight, well, this is yesterday, April 11th. And what you can see is, well, at the beginning of the day, there was a lot of volatility, right? Up and down, up and down. The market did close the gap, but with you had to be nimble. If you didn't hop off as soon as the gap closed for a few points, you would have been burned. Later in the day, of course, as we can see, the market traded in a relatively narrow range, established support and resistance. Of course, looking at support and resistance, you could make an assumption that the market was going to go up over here and down over here based on what happened previously. And the market does do things many times that repeats a previous pattern. So support and resistance in this basis, in this regard, is a reason to place a trade. Was it a good reason? It was a pretty good reason, but that's something part of a basic trading knowledge that you should know. The real key for me at least, in terms of basics, was at 3 o'clock. And the early morning and the late afternoon is when the market really goes to town in terms of signaling a move that it's going to make for the rest of the day, particularly at the end of the day. Now, trading at the end of the day usually develops faster than at the beginning of the day. That's just one of the things that you learn when you learn trading. Trading at the end of the day gives very definite signals. And basically, I used three signals yesterday to make a trade to the downside. And I did very nicely on this trade. And it was the market provided three very strong signals to me. First of all was my trading zone. Okay, my trading zone is the area where the market is likely to trade. At 3 o'clock, a shooting star developed in conjunction with an overbought stochastic. And the other thing that I knew is that the market would likely traverse a range from 44.60 to 44.07. The market would likely to trade that. It's not likely that the market is going to start over here and end up back here. Happens, not likely. My trading zone, the shooting star, and the overbought stochastic. And that gave me a strong reason to trade to the downside. And let me say something else in conjunction with this trade, because it violated support over here, didn't it? Well, another rule about trading is that 3 tests of a support or resistance is usually a breakthrough. And so 1, 2, 3, breakthrough. Okay, so that's a rule. That's a 4th reason to take a trade to the downside here. And I did very nicely for 44.32 down to 44.09. Very nice trade, and with relatively low risk. And so if you are a trader, or if you are knowledgeable, you have the education, then you could call yourself a trader, provided that you have a winning track record. Because if you don't, you really can't call yourself a trader. After all, would a doctor who lost most of his patients be really a doctor? Certainly wouldn't be a good doctor. Would a lawyer who lost all his cases be a lawyer? Well, he certainly wouldn't be a good lawyer. But nevertheless, a doctor has a degree and a certificate. A lawyer has a degree and a certificate. So get smart, invest in yourself, get an education, learn the market, watch the market. You don't have to trade every day. Just watch as trades develop. If you find a trade like this once a week, you're a trader, okay? If you know how to recognize this with confirming indicators, you are a trader, because then you'll be consistent. Anyway, that's my message for the day. Today is April 12th, Marv Eisen from Timeless Dollar. If you're looking for some education in trading, E-minis and micro E-minis, or you want to speak with me personally, I offer one-on-one coaching on a very limited time basis. My time is very limited, but I'll make it available for a half an hour to an hour session. Check out my site, timelessdollar.com. You'll see a link. Of course, if you enroll in my courses, you'll get a good education, not only learning the market, but learning yourself. So, thanks for watching. Trade safely, and I'll see you in my next video.